when we talk about the recent market fall which took place, and market hit their lowest point on 23rd of March 2020, and then it grew exponentially, the biggest recovery, the best recovery we have ever seen in our lifetimes, right? So why do you think, what were the factors which were involved in this market recovery? Because many of the investors, as you said, Warren Buffett sir and even Ramdev Agarwal sir, they were all saying that the recovery will take at least 2 to 3 months. It will
Two
not
to
be a
three
V-shaped
years.
recovery.
2 to 3 years.
Sorry, 2 to 3 years. It will not be a V-shaped recovery. It will be a gradual recovery.
Okay, so there are 2 3 reasons, plain and simple. One is on hindsight when we see we realize, but statistics are saying, and this is astonishing number. 65% of the total turnover in the last year, financial year 2020, when I read it in ET Prime, were bought by retail traders. It wasn't bought by institutions. Shocking. 63 or 65%. That is amounting to around 65,000 crore rupees. So can you just imagine suddenly so much of influx of money from retail, and there are multiple reasons. First, suddenly people started paying attention that yes, there's something called stock markets and why it is important to take care of our finances, because this COVID situation gave a reality check to a lot of people that we cannot depend on a single source of income. We need to have investments working for us when we are sleeping. So that was one reason. Second, some people started finding it very fascinating. A good share of it goes to social media influencers also, who started talking about investment. Today, I realize that even those people, social media influencers who have no idea about what are stocks, what are investment, are still talking about investment because they know that this topic is getting a lot of eyeballs from young people. They now want to take care of their expenses. So,
Yeah.
one reason is, of course, the 65,000 crore of turnover, 63 or 65% bought by retail. Second reason, the biggest reason across the globe, is the central bank. The central banks have been pouring in a lot of money, a lot of cash. The liquidity influx, and they played it smart. They wanted to make sure that you don't have to go into this interest raise mechanism. You don't have to go into anything which can completely shatter the hopes of banking system, and to make sure everything remains afloat, everyone was printing machine, and US has this beautiful machine of printing all the money. So whenever they want, they can
Yeah.
actually print a lot of money. So that actually ensured that there is enough liquidity, and that liquidity, that money flow, was transferred or passed to the retailers. Retail in the sense the normal people, with the help of, let's say, there were government organizations which were passed on this money for various facilities. There were government banks. There were infrastructure companies. The companies were said you don't have to stop your recruitment. So somehow they played this smartly. In 1928, 1930, when this thing happened, the central bank didn't take any charge. And that is why the complete economic collapsed for almost 20-25 years. Okay, and that's in the late 1930s. This time, they didn't let this thing happen. So the biggest reason is the central bank pumping money. It's just like usually what happens in recession or this thing, you run out of money. But here there is so much of money printing that if you know how to earn money, you can earn the money. That's the second reason. So central bank pumping up this thing. And the third thing is there were a lot of hedge funds who were sitting on the backbench even in the month of January and February. They had not invested the money, and they were probably looking to invest after 2-3 years. But now at those levels, when market went up to 7,500 and all those levels, they realized this is such a lucrative opportunity. If we don't invest right now, when will we invest? And suddenly, back to back, there was a ripple effect when
Yeah.
they started investing. So mutual funds, Indian mutual funds, they started investing because LIC personally couldn't invest because they were already sitting on a loss of 1.5 lakh crore. So now it had to be other organizations like ICICI AMC, SDFC AMC, and every day you could see the report that mutual funds are buying this much, this much, this much. So they bought this afloat, and then there was a cycle where the retail traders. And another interesting thing is, since physically a lot of people were not able to work, there were so many in my circle also, they withdrew a lot of money from their existing business, and that money also got diverted into this thing. See, what Narendra Modi ji has done is demonetization, so you cannot play around with black money, cash. Gold also, there are certain imposition. Real estate and Corona, you cannot build up the money. So if someone has to make money, where will that money flow in? The obvious choice was stock markets. And data always supports. Zerodha says in the last 8 years, they didn't have so many demat accounts as much as they had in the last 3 months during the Corona time. Like 8 years and 3 months.
Yeah,
All the
correct.
brokers. Suddenly the brokers actually launched their IPOs. For example, Angel had been waiting for a golden opportunity. Angel got this thing and they launched this thing. So this clearly gives the significance that yes, the awareness has gone up. there is still a space. I would say maybe from 2% now 5 or 6% are interested into investing. But again, some more falls like the recent time happened, and a lot of newcomers will go out. But then those who are going to stay over here will still count to around 5 or 6%. So we still have a lot of space for investors and traders to come into picture. So India still is like, despite all those things, is like 5 or 6% invested only. Okay, so we have good space over here.